I want to get in Narendra Solanki, Head of Fundamental Research at Anand Rathi Shares and Stockbrokers, as well as Nipun Lodha, Head Investment Banking at PL Capital, for their view on LG. Welcome to both of you, and thank you so much for speaking with it. Narendra, I'm going to start with you first on what you make of LG. Market leadership is one thing, but OFS, import dependence, all of these things are not bothering you? Do you think it's a good buy right now?
Yeah, good morning. See, overall, if you look at the sector as well as the way the company has grown out, and it is right now market leader with having a market share between 25 to 30% in six major categories, which is very big. And there are very few companies in India commanding that kind of a position, market leadership position in six major categories, which includes washing machine, TVs, refrigerators, ACs, and water purifier, steel tank based. So these are the major consumption areas. Plus, the company is having a very wide spread of product portfolio, right from basic offerings to the premium offerings. So these kind of product portfolio and having market leadership is very rare for a company. And then if you see the valuations, so it's reasonable valuation taking into account the contingent liabilities which the market has been talking of. And in comparison with peers, I think it is still 15 to 20% cheaper right now at present market situation. So we have a subscribe rating for investors, and there has also been a good response from overall investment community as well.
Yeah, there has been a good response, but what are the three reasons? Nipun, let me come to you. What are the three reasons you would say that if you have not yet subscribed, you should, and if you don't get an allocation, you should buy? Are there three clear reasons?
First thing, LG is a market leader in all its segments, right? It has significant market share. I should say it has upwards of 25% in all its market segments. Plus, it has the good product portfolio, which is up to the market and ahead of the curve in terms of the competition, what it has. Third thing, it is the financial performance of the company. If you look at it, it has been consistently delivering ROCE of approximately 35 to 40% in the past years, right? Hopefully, going forward also, it will continue to deliver the same numbers because this current issue is the entire offer for sale. There is no increase in capital. There is no requirement of capital in the company. So this also ensures that the profitability ratios and the key ratios would remain consistent with the past, what it has been doing. So these are few things which I believe will ensure that the company performs as it has been performing in the past, and one should subscribe to this issue.
Narendra, is the overarching reason why there is some demand for this company the valuation at which the IPO is coming, circa 35 times earnings, is not exactly terribly expensive for a consumer durables leader?
Yeah, definitely. Plus, also if you look at it in terms of price to sales, so it is again at three times it's reasonable. Plus, you have to keep in mind that company is already in process of setting up new manufacturing facilities, and its existing facilities are running well over 75%. Its Noida plant is operating at more than 75% capacity utilization, and Pune plant is almost reaching 70%. So the new facility which is coming up at Sri City would also be up and running starting this year, and it would be gradually ramping up and coming online fully by FY29. So that would be adding a lot of runway in terms of revenues, as well as the company with this new facility is targeting premium products, mainly high premium products, so which are generally more margin accretive. So going ahead, as the Sri City plant ramps up its production, we are going to see increase in margins as well. So from that point of view, on a PE basis, the earnings, you have, if you look at it from a 2 years perspective, 2 to 3 years perspective, it's not that costly right now.
So, and Nipun, therefore the question is this, that one, that it gets subscribed well, two, it lists at a slight premium to its, I don't know what quantum of premium, but would you be comfortable investing if you don't get in the primary market, in the secondary market if it lists at a particular premium, and what would that premium be up till which you would be comfortable buying LG even after its listing?
Well, it's a tall order for the company to deliver the performance as it has delivered in the past.
Okay.
And definitely with the margins increasing, From if you look at the EBITDA margins, they've increased from 10% to 12%, and the domestic component which they have sourcing of which has gone up to 51%. That's the reason that it has gone up. If this goes up, definitely the EBITDA margins will go up, and at that, if you look at those situations, it is a sense to buy the stock at listing also.
Nipun, so you're saying there is a case to buy the stock on listing. Both of you have talked about the bull case for LG. What's the bear case? Let me reverse it because we should give an overview to our viewers. So Nipun, I'm going to start with you. What are the risk factors?
Risk factors, yes, there will be I should say there will be a good churning at the time of listing, and the stock can open flat looking at looking at the size of the issue, what it has, and the retail churning will happen or institutional churning will happen. This will pull the price down by the excess of supply in the market. Second thing is that will they be in a position to do the capex as they have highlighted of 5,000 crore rupees going forward? Because the cash accruals are also 50% year on year, and that has to be delivered in 1 year time frame with the internal accruals. So these things remain that will they be in a position to deliver that expansion plan? So in that case, the price remains flattish, I should say that.
What about you? Let me also get a view from you, Narendra.
Yeah, I think one thing we have to see is that from sectoral perspective, if there is any demand, if the demand does not improve or if it remains flattish for overall sector because of some reasons, maybe like a global volatility or the global risk regarding the war scenario, something happens. So that would be the case wherein the company might not grow because the demand is not that much growing. Plus, I think any delay regarding the capacity expansion ramp-up plans could also defer the margin expansions, and any sudden commodity prices volatility may also be somewhat flowing into the raw material cost and may also dampen the margin. So these are all reasons which, although are not directly in control of the company, but yeah, definitely may act as a risk for the company. And coming to the royalty part, I think the management has already clarified that the present structure would at least remain for next 1 to 2 years. So from that perspective, I don't see any immediate risk, but yeah, there is an option of increasing royalty to 5%, and then as and when that increases beyond after 2 years, I think at that point in time, I think market will also take cognizance of that.
Okay. All right. So you've heard both the bull case and the bear case for an IPO, which is top of mind right now. That's why we're talking about it in such depth. Thank you so much, Narendra Solanki and Nipun Lodha, for speaking with us this morning on NDTV Profit.